Welcome to Kaizen Time, part of the Blood, Sweat, and Business podcast, where we provide constant improvement to businesses through timely, actionable financial solutions. Do you want answers to your financial questions? Email us at bsb@kaizencpas.com. Now let's get started.
Welcome everyone to Kaizen Time, part of the Blood, Sweat, and Business podcast. I am joined with Pierre, one of our managers at Kaizen. Welcome, Pierre.
Well, welcome. Thanks for having me.
You're welcome. And so let's actually get right into the meat of our conversation, which is how can small businesses prepare for tax season effectively? So that is coming up. There is this hard line where it says, okay, January 1st just dropped, get to work. So what is the first thing that people need to be doing? Step one, boom.
So step one is make sure you have good information. That means make sure you get your accounts receivable, your accounts payable, anything you're going to write off, anything that hasn't been put in, get it into the system. Make sure your inventory is a good number. Make sure that if you have any new equipment or you sold any equipment, that you have that listed. If you have any new notes or any other lines of credit, having the information available is the best way to get you prepared for the year end.
So I want to pause you for a second right there and say, is that all stuff that could have been done before, though?
Generally, yeah. So we send out questionnaires at this time of year to say, hey, you need to update all these things. And usually the best practice is to get it when you get it. You buy a new truck, send in the paperwork. Don't leave it in the glove box and try to find it because some of your employees are out driving that truck around.
It goes missing. Exactly. You hand it in when it's there. It's out of sight, out of mind. You don't got to worry about it. It's in the system.
Yep. Because chasing that stuff down leaves big gaps in the planning process.
And it costs time.
Yep.
Yep.
And there are only so many things you can do by the end of the year. There are a couple things you can do after December 31st, but all these things you'd want to have together right now to see if you can make any other changes.
Okay. So you should spend all the time before the year having everything ready, be organized, ready to go, so that when January 1st hits, you can just hand it all in and be like, I was good this year, right?
Yes. Yep. We have lots of clients that do that, but we have a lot of clients that business gets in the way of handling the paperwork.
No, it makes perfect sense. They're busy doing their business.
Doing the actual work. Yeah.
Exactly. Okay, so they collect all this material. They have the receipts, the invoices, whatever. January 1st comes in, they hand you a thick packet, right? What else do they need to be doing? Or is that it? Like, is that, hey, we did a great job?
That would be great. But generally right now, we want to take as much information we can, project out to the end of the year what we think the income's going to be.
So this is all before
This is all. Year. This is today.
This is today.
October, November, December.
Okay.
To see where we're going to be at the end of the year, because if we need to make estimates or we want to think about buying some equipment, or if you want to make pension profit contributions, now's the time to do that before the end of the year so that you're ready for January 1st and eventually March 15th and April 15th when taxes are due.
So really what we're looking at is in that October, November, December is making any of those tweaks, those adjustments to really maximize what they're looking at for their taxes. Yeah,
so we like to talk about harvesting the tax brackets. So right now, I often say that if you're going to make $1 million over 10 years, you probably want to make $100,000 each year rather than 0, 0, 0, 0, $1 million, because those brackets are anywhere from 12% all the way up to 37%. So if you put all the income into 1 year, you're going to be paying $370,000 in tax on that $1 million. Okay. But if you broke it up over 10, you could be paying, if you're in the 22% bracket each year, you're paying $220,000. That's some significant tax savings, and it's all just about timing. So we don't always want to get your tax to be zero. Let's harvest some each year, because with that, then you can get bank loans. Then you can get investors if you show you're making money. One of my favorite questions to ask kids a lot, we do some high school classes, is who wants to pay taxes? And nobody wants to pay taxes.
No one wants to pay taxes.
Well, however, but I say, well, you're wrong. If you pay taxes, that means you're making money. So you want to pay taxes. Now, you don't want to overpay taxes, but sometimes, if you want to have a successful business, you're going to be paying some taxes.
Okay. So essentially that little bit of growth shows a lot, right? Like a bank is more acclimated to give you a loan. Hey, we're seeing progress. You can forecast better when you see, okay, we have some steady growth, as opposed to literally nothing and then just it takes off. It doesn't build any confidence for an investor or really employees or anything, right?
Yes. A lot of times you get the person who wants to go get a bank loan and you have 10 years of losses. what bank wants to give you any money? All you do is lose money, aside from the Donald Trump factor. But he's buying new equipment and stuff and buying new hotels. That's how he's deferring it. But generally, the small business owner can't go out and buy a $100 million hotel to defer the $100 million of income he made last year.
Okay,
so
that actually makes tons of sense. So, and again, if you have that one like spike, it kind of makes you question, like, what is it? Did they just get one really big contract, and then is it going to flatline for the next
one and
whatever?
done? Yeah.
Right. Okay, awesome. What else can they be doing October, November, December?
So definitely at this time of year, you want to talk about, if you're a cash basis taxpayer, you want to pay as many bills as possible by the end of the year. If you're trying to lower your bracket to stay in the 22% bracket.
And that's like, oh, you're buying the equipment, you're okay, perfect.
But pay cash basis people, if you spend the money, you get the deduction. Okay. If you're accrual basis, all you need to do is get the invoice, and then it goes on as a payable.
Okay.
But cash basis, you want to pay it out to get the deduction.
Okay. As far as an accrual, then you could just get it and then be paying it.
Yeah.
And that can move into
you
the
could
next
order
year.
it and not pay it till next year. The IRS wants you to pay it within 90 days of the invoice. So anything you get in December would count as a deduction this year.
Okay.
Conversely, any sales you have that you didn't get paid for on accrual basis, you have to put in this year if you sent the bill out.
Oh, interesting. Okay. What else? Are we talking like, if you did this is 90%? Already we're in a great spot for taxes.
Obviously, you want to keep doing your work. Sometimes people slow down this time of year. But when you look at some of the things that you can do at the end of the year, like buying that piece of equipment, you can buy a piece of equipment if you need that piece of equipment. We never recommend buying equipment just for tax purposes, because the only person who's making money there is the equipment dealer. You're great, you have a brand new piece of equipment. But if this is the time of year to say, okay, what can we get at the end of the year that will help us with taxes, and also maybe there's a good deal at the end of the year, and we'll be ready to hit the ground running at the beginning of next year when we get this in.
So really, it has to serve the purpose. Yes, there has to be the demand for it. Again, don't just buy it because, oh, well, it's on sale or whatever.
Correct.
A lot of us fall into that trap.
Yeah. A lot of times I get the question, hey, Pierre, should I buy a new truck? All right, well, why do you need a new truck? It's everybody likes to have a new truck if that's your image. But if you're not able to make appointments, you're a plumber and you're not able to make appointments, you need a new truck, regardless of whether you get the deduction or not.
If you spent the entire year saying, I need a new truck, now probably at the end of the year, now you can say, okay, we can probably get that truck.
But oftentimes we talk about, okay, can we take advantage of the Section 179 deduction or bonus depreciation at the end of the year? Because all you have to do is have it.
Can I have you explain that a little bit for people who are unfamiliar, including me?
So depreciation is a method of allocating your large expenditures. Okay. All right. So if you go out and you buy an excavator for $200,000, the IRS says you have to spread that over its estimated useful life. You can't just go and buy it and take the deduction. Then they come back and they say, okay, for small businesses, yes, you can take that deduction. And what is a small business is generally a business that has been less than 28 million in average sales over the last 3 years. Okay. A lot of our clients are in that category. And then on top of that, they say you can't spend more than $2.8 million on equipment. So Coca-Cola probably does. AbbVie probably does spend large money.
But they're not a small business.
But they're not a small business. But we are. So if you buy 3 excavators, you're getting close. But you buy 1 excavator, they say, okay, you are a small business. As long as you don't spend more than that, we'll allow you to take up to $1.1 million in deduction.
So in many ways, this also goes back to what you're saying about being strategic. Okay, you want to get all these excavators. Be like, okay, you may need, let's say, 2 excavators. Buy one this year. The other one the next year.
Yep. So if we don't have good data to know if you're going to have good income this year and good income next year, then we're guessing, and you might inadvertently buy 2 in 1 year and not be able to efficiently take that Section 179.
And you may, and a business owner may be thinking, I have all this work coming, got all these new clients, and like, I need these 2 excavators now, which are not cheap, of course.
Yep.
And may want to get both, but in an ideal world, they're looking at this and saying, no, let's break this up. Let's be tactical about this. That makes perfect sense. It's great.
So really, back in our scenario, if you have $300,000 of income and you buy a $200,000 excavator, buy one this year and buy one next year, and now you've made a smooth harvest of each one of those brackets while leaving a little bit of income.
That's brilliant. Okay. What else do we want to talk about for this year? in the October, November, December, or is that really the
So
meat and
that's
potatoes?
basically it. But you're trying to aim for, the IRS allows you to take, as long as you pay 90% of current year tax or 100% of prior year's tax, it's 110% if your adjusted gross income is $150,000 or higher. So as long as you pay that, you could owe $1 million on April 15th, and you won't have any penalties. So you have to be prepared to have estimates paid in. Just like our W-2. That's why on our W-2 there's withholding, because the government wants you to pay it when you have it, just like I want your invoices when you have them. And that allows you to not have any penalties, and you can plan for paying that bill on April 15th a little better.
It's brilliant.
We don't want to give them the money before they require it.
Exactly. You don't want to pay beforehand.
And we certainly don't want to pay penalties. Sometimes it happens.
Well, and doing all this work on the front end avoids that. It prepares you for that. Okay. So let's move into January 1st.
Okay.
When everything just kind of hits the wall, right? What's the first thing that people should be doing?
So generally, January 1st, people are already looking for their next year stuff.
Okay.
So they don't care about taxes. We care about taxes because that's what we're
as
doing.
the people, so really from the business owner perspective, if they've done all the work on the front end, January 1st, they hand it over and they're like, whew, I did a great job.
Yeah.
Right.
Make sure we have the final numbers. Like I said, accounts receivable, accounts payable, inventory, all the big numbers, any invoices, any purchase of equipment and any sales of equipment and any new loans. Get that information into your accountant so then you have a little bit of window to do a couple of things. And when I say a couple of things, there's something like, if you don't have a retirement plan, you can establish a small employer pension plan after the year end and make contributions to it. That's like a last minute, here's one more thing we can do. The other things you can do is you can pay a bonus to your employees, put it in their hands rather than giving it all to the government. You can do that after the year end and have it still count towards
But
this
also make
year.
your employees real happy,
Yep,
right?
Yep. But again, you have to look at all the factors. We wouldn't do it just for tax purposes. You don't want to give your employees that aren't performing well a bonus for no reason. However, if you have a lot of income, it's probably because your employees are doing a good job.
Okay.
So share the wealth so that you don't have to pay it to the government. That's a couple things you can do after the year end. And then you can make that decision. How much of the Section 179 should we take this year to prepare for filing the tax return? Corporate returns are due on March 15th and individuals are due April 15th.
Okay. So one thing I do want to bring up, you said get all the numbers together for January 1st. What does that look like? Do you give them is it a giant spreadsheet? Is it lots of pieces of paper? What is the perfect storm?
We definitely do
Pierre,
want, don't want the shoebox.
Pierre, if you could say, like, if it looked exactly like this when it arrived on my desk, what would it be?
So really the only thing we're waiting to get are missing documents that come out after the year end. 1099 forms, K-1s from other investments you have, any other report that is due by January 31st, we want to have those for your personal return. Okay. Everything else, our monthly clients, we usually are right on top of everything.
They're basically
that we're ready to
that.
go. I have the numbers, and then we just can make some adjustments at the end of the year.
So basically what you're saying is if you're doing that monthly checkup, working on it on a monthly basis, or handing in those invoices immediately as it's done, the end of the year crunch isn't really much of a crunch at all, is it?
Yeah.
Right? Yep. You can actually maybe enjoy your holiday and see your family, right? That wouldn't be too bad.
Well, they still have to do next year's work. A lot of times we hear clients, where's my next job coming from? How are we staying ahead of this curve? How am I going to get this product that I can't get from China today? How am I going to make sure I have that ready for when the season opens for them, whether it's February or June or whenever their business cycle starts?
Oh, that's fabulous. Well, all right, let's do a quick recap for people. What is more or less the thing that they need to do? They need to stay on top.
Stay on top of it,
Keep those invoices, keep in contact with their CPAs, accountants, so on, and essentially be strategic throughout the year with their purchases.
Yeah.
Be planning about it. Don't just be, okay, we need to be purchasing everything right at the last second. Because that's when you are in a rush, it's when you make mistakes. Right?
Yes, very much so. And then also, the ship has sailed. If you want to go buy that excavator, you cannot buy it February 1st. because it has to be placed in service December 31st to get that deduction.
So there's not only that thought process of just the purchasing of it, it's the utilization and the invoicing and all that. There's multiple layers to it.
Yep. And then there are other deadlines. I mentioned the W-2s and the 1099s that your company has to issue need to go out by January 31st. So make sure we have all that up to date, and it's usually very easy to run it.
Perfect. All right. Well, I think that pretty much wraps up. Thank you, Pierre.
You have been listening to Kaizen Time, part of the Blood, Sweat, and Business podcast. If you like what you hear, subscribe and leave a 5-star review. This podcast has been brought to you by Kaizen CPAs Plus Advisors, providing advisory and accounting services to help you grow your business. Learn more at kaizencpas.com or email us at bsb@kaizencpas.com.